Alright, so first thing I'm going to do is kind of recap what we learned about last week, part one. So to do that, I'm going to go down to the daily. Actually, we'll do the weekly. So we talked about was turtle soups and how they are the start of any real move or any decent move in the market. And so what we talked about was we get a high that gets souped like so. And a good soup will be where the bodies don't close above the high. And if I zoom in here, you can see this tiny little wick on the weekly chart. That becomes a soup. And then after the soup should come, a change in state of delivery or an inverse. But either or, it becomes, the inverse can come before the CISD, or the CISD can come, before the inverse. So actually, let me type this out for the ones who weren't here. So okay, order of operations. So we have a turtle soup followed by CISD or inverse. Remember, one can come before the other. An inverse can come before CISD, or CISD can come before an inverse. It just depends on the setup. And so after that comes, our 2022 model, or standard FEG. And then after that, we hit the draw on liquidity, and the cycle repeats. Okay, so this is our little checklist here. This is exactly what happens in this picture. We have a soup, number one, CISD or inverse. We have an inverse gap here, then we get the CISD, closing below this candle here, creating a bearish order block. So we have a bearish OB, and then we should get our 2022 model, which would be this gap being created. And then, of course, we'll hit a draw on liquidity. In this case, it may be this low here. And then the cycle repeats. Okay, so this is the weekly. This is like right now on the weekly chart. We're able to do this, which means, it's looking like we're, flipping back bearish. We did inverse this gap as well, but right now we're holding this order block. But, if you remember the last class, we like to target the soup low, the previous low that started the move, because that's important. So this right here would be the turtle soup low, and up here would be the turtle soup high, which means if we start a bull cycle, like say we hit this draw on liquidity, the cycle repeats, we should come right back up and take the soup high, in the bullish scenario. So that's just a little short recap of what we talked about the first time. So now today, what I want to get into is, yes, screen down recording. So today what I want to get into is what can cause this to fail, or what you should look for when you expect it to work, right? Because this is a clean scenario, right? But there are times where it looks a little messy and it looks bad, and then it fails even though it looks clean sometimes as well. So we're going to get into all that today. So today's class is going to be, actually I'm going to leave that up there. Copy this and put it to a note. Okay, so today's class is going to be on part 2, missing ingredients. I know I spelled that wrong. That's what the autocorrect is for. Okay, so missing ingredients. That's what today's class is going to be on. So today I'm going to find, cherry-picked examples, because I want to go over like what is right about a setup and what's wrong about a setup. So for that, I do have to find cherry-picked examples. It's not going to be like last class where we kind of just picked random days and kind of went through everything. Okay. Okay. So what we're going to talk about, like I said, is the missing ingredients for you to find the perfect soup, and to find how it happens cleanly, like how I just showed you on the weekly. We're going to talk about what to look for to make sure that it's clean every single time, and to make sure that it's actually going to work, because what I just showed you before on the weekly is basically the framework to every good trade. And sometimes we'll be missing the 2022 model, or we'll be missing the inverse that happens after the CISD, or we won't even inverse something, and those are the missing things that cause it to fail. And so that's what I'm here to show you today. So going forward a little bit, I'm going to go to market open, which is 9:30 right there. We can see that it looks very, very choppy here, right? Of course, in hindsight, we do eventually dump, but I want to show you how it still plays out. This is a good example, even though as choppy as it looks, right? So we have this high getting swept. Okay, we have a fake order block here. It turns into a fake one. It looks real in the moment, but this is a soup. So we have turtle soup, and followed by a change of state of delivery. This right here, this gap gets inversed, this tiny one. Why is it important? Well, because it held us up the first time. As you can see, it took it. The body's held it. We took the high in the first place, which means it's a valid inverse. Okay. Remember, this is the 30-second. So we have a turtle soup followed by an inverse, mixed in with a CISD as we close through the inverse. Okay. And then we get a 2022 model. And if you remember the checklist, which I still have, everything on this checklist has been met. So we have the turtle soup, CISD, which is here, CISD, and the inverse. And then the drawn liquidity, which is much lower, right? It's actually technically got hit right here, right? And fast forwarding, in hindsight, of course, we tap into all three. As you can see, they're all stacked together, right? So we're not here to talk about entries, but that'll be the last part of this series is for entries. But you can clearly see, we tap into all three of these PD arrays on this tiny little wick here. I'm going to remove some of that so you can see it clearly. You can see this wick right here tapped into the bearish order block, the inverse, and the 2022 model to the tick. It's not a coincidence because it's 3 PD arrays in one. So this right here is a good example. Even though it looks choppy, it's still a good example of the checklist being met. So what I'm going to show you now is when there's things missing and the soup ends up failing, even though it looks valid. So that's what we're going to get into now. Let's get into it. On a regular day, we sometimes get a 10 o'clock reversal. So a lot of people may have been expecting a 10 o'clock reversal here, some sort of bounce, back up. So I'm going to talk about how, it looks like a real turtle soup and all that stuff, but the checklist is not being met. So I'm going to show you that now. Okay. So in this case, you could say this low, we expect it to be a soup. Why? Because the first candle did hold it, and so we would expect the CISD back up, and we actually do get that. Okay. We get a CISD here. We do have the inverse. We just barely got it, right? Maybe like to the tick. Okay, so we actually didn't get it yet. We'll count that as still holding for now. And we do have what looks like to be a manipulation leg, even though it's kind of small. Right, if I was to put this in line chart, you see it's very jagged. So we'd expect this to at least, come up to the high, which it did. Go ahead, another candle here. And this little tiny order block is holding. We had a 2022 model, but we can hardly get the inverse. And so you can see it's kind of taking a minute here to inverse in the first place, right? So we finally get the inverse, but no 2022 model, right? This technically is a 2022 model, but it instantly fails. And the reason why what I'm trying to get at is you can tell it's going to fail because we can't even inverse this gap, cleanly, right? There's things that are missing here, and what's missing is the inverse in this case. Just keeping things simple, right? Because technically, yes, we do inverse it on this candle by a tick, but we come straight back down. We don't really do anything, and this technically is a soup, right? So this is kind of one example of it being, bad. So the reason why I picked that one is, like I said, we usually want to see a 10 o'clock reversal, especially when, we're this far extended down. You know, some people, would be expecting a 10 o'clock reversal, and it almost looked like this was going to work, but we just never got that speed, that momentum, or anything. And like I said, the missing ingredient here was the inverse. So going to the next example, I have it at 10:13, and this one was actually a really good example. It's pretty much the same thing as before. So this low gets hit, not really a soup, okay? But this one looks more like a soup to me because we can hardly close below, so you'd expect to see ISD. Now, of course, you can just boil it down to, okay, it's a singular gap here that we expect to be inverse, and we should, take out the highs. But what's missing in this example is there's no smart money reversal because, and basically just keeping things simple, a smart money reversal is a manipulation leg, which is this right here. So if I put this in the line chart, you can see it's not that clean. It's not like this right here. We just have a sharp, jagged move down, and it looks like we have almost like a sharp move back up. This right here is just a more like displacement down, but there's no sharp, jagged move back up. We want to see something like this for a smart money reversal. You can see we almost had it here, right? Except we didn't go all the way up. We just stopped right there. For this example, you can clearly see we go down, but hardly move back up, right? And this is exactly why this inverse here does not play out, because the missing ingredient here would be the manipulation leg. There's no manipulation leg to really say that we're going to start taking out these highs. So yes, we do have a soup. You could use this low, or you could use this one. Doesn't really matter. We have the soup. We have the CISD, followed by an inverse. But what else is missing? There's no 2022 model, right? So we're missing two things here, actually. We're missing a manipulation leg, or a smart money reversal, and we're also missing a 2022 model, right? Those are two things that are missing from our checklist. Where is it? Up here, right? Because we should have the CISD, which we do have. We have, an inverse as well, but where's the 2022 model? That's the thing that's going to carry us to hit the drawn liquidity. You can see we don't have the 2022 model, so we just come right back down. Okay, so the cycle repeated there. Looks like a soup. And this time we actually do have the framework. So that's interesting. So we have a soup. We have a soup here, right? Followed by an inverse. We have a slight manipulation leg here. And then we get the 2022 model right there. This would be our CISD as well. And this would actually be your turtle soup high, which actually got hit. So this one would be technically invalid because we already hit the high. But you can see how it that's probably why we hit the high, because we have the actual framework on this run right here, right? I hope everyone can tell the difference between that. I know it's a little bit confusing, but if I go to the line chart, you could just simplify this down move. I know it's kind of not smooth there, right? We kind of do a lot, but we come right back up. So That's what happens here. And if you wanted to simplify it, you could easily just go down, back up. That's exactly what happened here. Right, so this right here, simplified, is just a V-shape recovery. That's what we're getting at here. And then we hit the high. So you can kind of see how it's different from this right here. Does everyone get that? Like I said, you actually shouldn't be looking to long this anymore because this right here is the soup high, right? This candle right here is the soup high, and we already took it. That's an internal liquidity. We've already taken the internal, so you really would not be looking to long anymore because we've already taken the level internal. I actually don't even know what happens here. So it fails. That's probably exactly why it failed, actually. It looks like to me is that we soup this high, and then we soup the turtle soup low again, but we make equal lows. So those will probably get hit, right, if I had to imagine. Come right back up and tapping. Okay, so this is actually going back to our previous class. When are the times you expect a high probability soup in the first place is, inside of a gap, right? So we have the soup high here, tap into the gap. So now I would expect a clean CISD down to take out these equal lows. And actually, like I said, I don't really know, I remember what happens here. We may keep going up, but just looking at it, CISD. So I would expect this gap to be inversed. This bullish one. Okay, it took us a little minute. We basically souped the high again, this internal high. But we soup CISD into an inverse with the 2022 model. So you can kind of see actually this is another example of what's missing. We did have the soup. Remember, this was the soup, the original soup. Tap into a gap, but we're missing the inverse, right? So you wouldn't just jump the gun and say, oh yeah, I'm going to take the CISD because you'd want to wait for the inverse. You want to wait for the 2022 model, right? But then we get it after another price leg. I don't want to confuse anybody, so I'm not going to explain what really happened here. But we're just holding the bullish gap. We come back up. We soup this high, even if it's by one tick, which is exactly what happened here. We soup the high, and then we start the cycle again very cleanly, just like here. It was bad. We were missing stuff here. Then we started cleanly here, except there's no entry, right? And so now we come back up to start it cleanly, but it's not clean because we're missing something until we start the cycle again, and then it's a little bit cleaner. So we have a soup into a inverse, which comes first. This now would be your CISD, and you can see we inverse the external gap at the same time as the CISD, and that's how you know it's a real CISD, by the way, guys, because the candle that does it should be a very energetic, volume-filled candle. You can see this one's a big fat candle that not only does it inverse the gap, but it gives us our CISD, and it inverses this gap as well, this tiny little one. So let's see what happens. So this one should give us our 2022, which it does. So I'm going to go ahead and remove this up, the inverse gap. Only going to draw the bearish one here. So you can see the criteria is being met once again. We have a soup, CISD. Oh no, we have a soup and inverse CISD 2022 model. And as you can see, it's overlapping PD arrays here because we have our bearish order block. We have well, this is technically a breaker, but we have our breaker / order block mixed in with a inverse external gap with our 2022 model right here. So the very highest we should go up is maybe back to this inverse, but I do expect this to hold, and then we probably hit these equal lows, or we're just going to hit the equal lows immediately because this is a big energetic candle. So let's see what happens. So we tap into that there. We come back to that upper gap. Remember, cycle repeats, another soup, and then we hit the draw on liquidity. And if if this low is not a soup, well, then the draw is lower. That's what we learned from the other class. So now moving on to started from the bottoms question. He said, what's a good time frame to confirm a market structure shift? It honestly depends on what you're comfortable with. I know a lot of people like different time frames. Me personally, I like the 30-second. But it honestly does not matter. So I can actually show you what the 5-minute looks like here and see if we can find the same scenario. So what I'm going to do here is I'm going to go to a random day, because for this I want to prove that this exact framework happens on any time frame. You can use the exact same thing on any time frame. So for this I will go to a random day. So this is kind of tricky because we don't actually hit the high here, right? And this right here, you can't really call this a soup because we close above. But on the lower time frame, I'm sure there's like little tiny swing highs here or something like that that we soup, and that's kind of why we stop here. But sticking to the model here, we don't have a soup, so we're actually missing an ingredient here. We're missing the very thing that starts the move in this exact scenario. But keeping in mind that we're so low, you can honestly just say that this is a break of structure down, or market structure shift down. And this right here, there should have been a gap here, but there isn't. It's just basically just a breaker. And that's a little bit more advanced because, it's a break of structure mixed in market structure shift mixed in with a breaker. But the cycle does technically repeat because it's on a lower time frame. That there's probably a high. Let me just actually confirm that, see if we can go that far back. Yeah, it could also be an SMT, I just can't confirm that because, there's we're in replay mode. That's a good point. It could also be an SMT. But yeah, like I was saying, this is going to be a bearish gap on the lower time frame. We inverse it, but we don't hit the high. So I'm almost guessing that this is probably an SMT of some sort. We could actually try to confirm it here. Let me go back to this day. So we're looking for this high to get swept, and it looks like it did. So yes, you were correct. We did have a bearish SMT there. I hope you guys understand. There was an SMT there. That's why we didn't hit that high quite, exactly. But there was an SMT with the 710. It's kind of hard to see though because we're in replay mode. But in live time, hopefully you noticed that and you could tell, SMT. So we should be looking for the same exact cycle. So that's actually a good thing to note. So I'm actually going to add that here in our notes. This would be something that you can write down in your own notes. If there's no turtle soup, then look for an SMT. So if there's no turtle soup on the high, then look for an SMT, and then expect the exact same framework to play out. So even though there's no soup here, let's see if we can find a CISD and inverse in 2022 model. So just looking at this would be our bearish order block, which is our CISD. And then we get our inverse right there. And we also have a 2022 model overlapping with the inverse. Okay. So this is the same thing. So remember, you would be trying to target the soup low in this scenario. So you'd try to be targeting this low down here, or you could target an internal low. In this case, we don't sweep this low. It's kind of like a swing low. So you could easily enter on this gap once we create it, or you could wait until we inverse the gap and still try to enter, where they overlap, or you could just take, our CISD, right? Whichever trade you take, your stop loss could easily be at the bearish SMT high, because remember, once we have an SMT, you don't expect the high to get hit. On top of that, you don't expect the soup high to get hit. So it's kind of a combination of both here. 22-point stop for about a 22-point take profit, which is about a 1-to-1. Well, it is a 1-to-1. And you could hold a run or two down there, or you could make this your real TP if you're not comfortable taking a 1-to-1. This is about a 1.5 reward. Let's see what happens. It looks like we stop here, so that would be your stop to break even, or maybe you just take most off there because it's a 1-to-1. But it does look like this is a soup. So let me just clean it up a little bit. I'm going to remove the inverse. Keep in mind there is an inverse there. I want to talk about what's happening here, because you can easily try to look for the cycle repeating, because remember, we hit the draw on liquidity, the cycle repeats. In this case, we hit the draw on liquidity, the internal swing low. The cycle looks like it's repeating here, but remember, there's missing ingredients here. There's no manipulation leg, right? Yes, this is technically a manipulation leg. So actually, okay, we'll scratch that. There is a manipulation leg here, okay? But there's no inverse after that. So we have a soup. This will be our turtle soup, followed by CISD. But can you guys see what's missing now? There's no 2022 model. There's no inverse. So we're missing two things out of this. We're missing a inverse, which means if you were truly bullish, we would have inversed this gap back to the upside. Out of that inverse, we'd probably get a 2022 model. So two things are missing here from our checklist, and that's exactly why this fails, or it should fail. And boom, that's exactly what happens when we're missing things. So I hope everyone gets that, because that's actually a pretty good example there. I don't remember, like I said, this is completely random to me. I don't remember what happened this day. On top of that, we're using a totally different time frame. But start from the bottom. I would say that on the 5-minute, it seems like we get the 2022 model before we get the inverse sometimes. So maybe, as long as we don't hit the draw on liquidity, a good way to gauge it for good entry or good confirmation that we're going to hit your target is maybe look for the 2022 model, and then if we inverse the gap, that's your confirmation that we really probably will go to this draw on liquidity. Because as you can see, we get this bearish gap before we actually inverse this one. You can see this is a doji candle, and then we inverse it while tapping into the 2022 model. And so then that's when you could say, okay, since we inverse this gap and we have our 2022, we have our bearish order block, you could definitely say, okay, we should definitely hit this draw. And maybe you could just hop down to the 1 minute or something and find an entry. So let's see if we can do that, actually. So we're going to right here where this happened at. And let's see if there's an entry. So looking at this, looks like we tapped into a premium 1 minute gap, which would be our soup high, CISD, into an inverse. Let me just remove the tiny 5-minute. So this is just 1 minute, PD arrays here. Inverse, CISD, inverse, turtle soup at the high. Looks like we're going to inverse the other one, and we should get a 2022 model right there. Let's see. There you go. 2022 model holds while tapping into the inverse and the order block. So you can basically, like I said, we waited until that, the 5-minute one inverse, right? And then you look, like I said, for an internal model after that. So remember, this right here is a 5-minute inverse. An inverse on that candle, so I did not cheat. All I did is go to the 1 minute and see if we can see the same exact framework. And what do you know? It's the same framework. So remember, this is the 5-minute gap, an inverse on this candle. You go back to the 1 minute and you see, okay, can we find the same framework that we need to look for? Yes, we can. We have the inverse. We have the turtle soup at the high inside of a premium gap. We have our CISD, which is, a bear shell B. We have our inverse. We get a 2022 model. We tap into all three where they overlap, and then we go down. So you can already kind of see a common theme here when this works very cleanly, is that we tap into the point where all three of them overlap. It's very interesting. And that's kind of why I wanted to save the entry models for the last, because there's a little bit more that we have to talk about. But I hope this is you guys can see how this stuff works, like on multiple time frames, and how it all works together. So thank you guys for stopping by. I hope you guys have a good one, and I'll see you in the next video.